In prior videos, we learned how accountants calculate gross and net wages and how to record each payroll in the General Journal. In this video, we'll learn about Form 941, Employer's Quarterly Federal Tax Return, the frequency with which employers must deposit the employee's withholdings for Social Security, Medicare, and income taxes, and the employer match. In addition, we'll learn about the year-end Form W-2 and Form W-3. The starting point for determining how much a company owes in payroll taxes is the payroll register. The payroll register provides information about wages subject to payroll taxes, and the first schedule shows a portion of the payroll register for the week ending January 6th. Let's take a look at the payroll register. In the header section, you can see the period ending date of January 6th, 2021, and the date the payroll was paid, which is January 8th, 2021. Below that, we have three major sections. The first one is the taxable wages section, followed by deductions, and then a section called distribution. In the taxable wages section, we have Social Security and Medicare taxable wages and FUTA wages. In the deduction section, we can see the amounts withheld from the employee's paycheck for Social Security, Medicare, income tax, and health insurance. In the distribution section, we see the net amount paid to the employee, the check number, and whether the wages are office salaries and shipping wages. It is absolutely possible to manually track payroll the way it is shown here, especially if there aren't that many employees. However, many companies use payroll companies like ADP to prepare payroll and payroll tax returns. Below the payroll register for January 6th, we see the quarterly earnings for all employees for total taxable wages of $29,217.50. If there are pre-tax deductions, the Social Security and Medicare taxable wages would likely be different. But in our example, all taxable wages are the same except for the FUTA and SUTA wages, which have a maximum wage amount of $7,000 per year. Please keep in mind that some states have a different limit for SUTA wages than $7,000. For instance, Alaska's SUTA maximum wages for 2023 are $46,800 and Idaho's is $50,000. However, California's limit is $7,000, just like the federal limit for FUTA. The deductions section shows the total Social Security tax, Medicare tax, and income tax withheld from the employee's paychecks for the entire quarter. We'll review shortly how this information is transferred to Form 941, Employer's Quarterly Federal Tax Return. There are a lot of responsibilities related to managing payroll manually rather than outsourcing it to a payroll company. Employers are responsible for withholding taxes from the employee's gross wages and submitting the amount to the applicable tax agency. And in addition, the employer must also pay the employer's portion of the Social Security and Medicare taxes equal to what was withheld from the employee's paycheck, make the deposits timely and accurately, and file the applicable tax forms when they're due. So what exactly is involved in making tax deposits for federal income taxes, Social Security, and Medicare taxes? First, the IRS prefers electronic payments and requires electronic payments if the annual federal tax deposits are more than $200,000. Employers who are required to make electronic deposits and do not do so can be subject to a 10% penalty. Very important, the frequency of deposits depends on the amount of the tax liability, not the payroll date frequency. So just because you have a semi-weekly payroll doesn't mean that the employer's tax deposits are due semi-weekly. The basis for determining the deposit frequency are the amount owed and the amount reported in the look-back period. What's the look-back period? The look-back period is a 4-quarter period ending on June 30th of the preceding year. Let's look at the graphic. If the payroll tax liability per year is below $2,500, then the deposit frequency is quarterly, and the amount due is paid with the filing of the tax return. If the payroll tax liability is greater than $2,500, then we have to look at the amount of payroll tax during the look-back period. If the amount was less than $50,000, then the deposit frequency is monthly, and the amount is paid by the 15th of the following month. If the tax liability is greater than $50,000 during the look-back period, but not more than $100,000 during a payroll date, then the deposit frequency is semi-weekly, and depending on the day of the week, the payroll is paid. The due date is the following Wednesday or Friday. If on any payroll day, the tax liability exceeds $100,000, which is common during times when bonuses are paid, the deposit must be made on the next banking date. This is Form 941, the employer's quarterly federal tax return, and one of several quarterly payroll tax forms the employer must complete and submit. So let's take a look at the form. At the top, we have the section where we enter the employer identification number and the company name and address. And to the right of the company information, we would put an X on the row that shows the correct quarter that the Form 941 is being completed for. In our example, that is the first quarter of 2021. The next section below that is Part 1. We enter the number of employees who received wages on March 12th. Which is 5 employees. And we enter the taxable earnings from our payroll register on row 2. The income taxes from our payroll register is entered on row 3. Next, we enter the Social Security taxable wages on row 5A and multiply that amount by 12.4%. Why 12.4%? Well, because that's the employer has to remit to the 6.2% withheld from the employee, but also has to pay the employer portion of 6.2%, combined 12.4%. The taxable Medicare wages are entered on row 5C, and we multiply that amount by 2.9%. Why 2.9%? While it represents the employee and employer portion of 1.45% each. On the next row, row 5D, we would enter any Medicare wages subject to the additional Medicare tax withholding. However, that doesn't apply in our example. So the next step is to sum up Medicare and Social Security tax liabilities on row 5E for a total of $4,470.28. And then add the income tax on row 6 for a total of $6,485.28. There are no further adjustments, and our total taxes after adjustments is $6,485.28. In our example, the employer made deposits of $6,485.28, and that amount is entered on line 11, row 11. And because that matches the total tax liability on row 10, there is no amount due or overpayment. On page 2 of Form 941, the employer enters the details of the deposits in Part 2 and completes Part 3 and 4 if applicable. In Part 5, the employer signs under penalties of perjury and mails the return. Signing a document under penalties of perjury is to be taken very seriously. A person convicted of perjury under federal law may face up to 5 years in prison and fines. The punishment for perjury under state law varies from state to state, but perjury is a felony and carries a possible prison sentence of at least 1 year plus fines and probation. At the end of the calendar year, employers summarize all payroll records for the year and provide the wage and tax statement, aka Form W-2, to each employee by January 31st of the following year. Form W-2 contains information about the employee's earnings and tax withholdings for the year. The information for Form W-2 comes from the employee's earning records. Two Form W-2s are given to the employee. One copy is sent to the Social Security Administration to track your Social Security benefits, and then the Social Security Administration shares the information with the IRS. One copy to the state tax agency and a copy for the employer. What you see here displayed as the Form W-2 is the official Form W-2. But there are quite a few other formats that are also approved by the IRS. Let's take a look at what information needs to be completed by the employer on Form W-2. It's important that all of the information on the Form W-2 reconciles back to the payroll registers. Box A is for the employee's Social Security number, and Box B is the employer's identification number, followed by the employer's name and address in Box C. Box D contains a control number, which is often filled in by payroll companies to allow tax preparation software like TurboTax to connect to the payroll company electronically to download the Form W-2 information rather than you having to type the Form W-2 information into the software program. Boxes E and F are for the employee's name and address. Now that we've completed the demographic information, we'll continue on the top right with box 1, 3, and 5 for federal, Social Security, and Medicare taxable wages. The employer then fills in the amounts withheld from the employee's paycheck for federal income tax, Social Security tax, and Medicare tax in boxes 2, 4, and 6. Tip information, if applicable, is filled in boxes 7 and 8. Boxes 10 to 14 are for stock options, cafeteria plan deductions, life insurance, and health insurance. Please take a look at the instructions for Form W-2 for Box 12. Box 15 is for the state abbreviation and employer state ID number, and Box 16 and 17 is for state taxable wages and tax withholdings. If there is a local tax, boxes 18, 19, and 20 are completed as well. Employers who stop working for the business during the year may ask that a Form W-2 be issued early. The Form W-2 must be issued within 30 days after the request or after the final wage payment, whichever is later. A copy of Form W-2 for each employee is attached to Form W-3. Form W-3 is due by the last day of February following the end of the calendar year. The Social Security Administration shares the tax information on Form W-2s with the Internal Revenue Service. The transmittal of wage and tax statements, Form W-3, is submitted with Form W-2 to the Social Security Administration. Form W-3 reports the total Social Security wages, total Medicare wages, total Social Security tax withheld, total Medicare tax withheld, total wages, tips, and other compensation, total federal income tax withheld, and other information. This Form W-3 is a summary of all Form W-2s which reconcile back to the payroll register and to the Form 941s that were filed quarterly. In addition, the IRS checks this Form W-2 against your tax return information. You can probably tell that there are a lot of double checks and controls in this process.